Hello, this is Nasdaq with IMTF Trade. Today is December 31st. We're a couple of hours away for New Year's. Happy New Year's to everyone. I am going to put out a special video today and tomorrow in regards to the markets. And the reason why is that 2019 is almost here. And everyone has to get ready for this market. October was a little taste of what happened, and the question is, what will happen in going into 2019? Will it be a 2008 that reoccurs? Will the markets go higher? That's a magical question. And it doesn't depend. It doesn't matter if you're trading for your retirement account, if you're trading for your own, for swing, day, or anything like that. It really does not matter. The lessons are still the same. Here's a chart back in 2000. This is the NDX, the technology side. I pretty much graduated in 1996 and became an engineer. At the same time, I was trading for a hobby. I rode this going all the way up as a retail trader, and then I lost everything and basically blew out my account and went into negative with margin with my broker back in 2000 here. Reason why is I was a retail trader, just began, didn't know when to get out, didn't know anything about money management, nothing at all. Not only did I lose my trading, my accounts and everything, but I also saw my retirement account from the engineering side in telecom go down drastically, more than 23%. It was a big shocker for me, where at one point I was worth a lot of money in 2000, and then all of a sudden, in about a couple of months, pretty much everything went down, and everything was destroyed. I do not want that to happen to other people, and that's one of the reasons why I'm actually teaching and trying to help people with all these free workshops and so forth going out there. Okay, I do not want that bleed to happen, and I want to stop this from happening with anyone going into 2019. So this is what happened to me as a retail trader. Luckily, I didn't give up due to my father, and at that point I came back and I learned from my mistakes and basically moved forward, and I was able to basically get the financial boom going up in 2003, and basically was able to sit there and correct and understand when the markets were going down in 2008. For the people that are dealing with the retirement accounts, you can't sit there and control what what funds are being bought or sold. However, you can tell your fund manager to sit there and go cash at points and then turn it back on. And that's exactly what I advise my family members, specifically my sister, on what to do. So I'll tell her on their 401k to sit there and go cash, and then I'll tell her when to turn it back on, and that pretty much saves the big, huge drawdowns that you typically get when the market's correct long term for 20% or more. Okay, so let's go to the current market situation now. The Nasdaq has pretty much been leading the markets going up after the financial crash. It was the first one to start a bullish trend, and it'll also indicate when this market's going to pretty much start to go through a pullback. And one of the things I want to show you is, notice this is the Ichimoku indicator with the IMTF in there. Notice one thing. We basically began going above this cloud here and starting this trend back here in 2010 here. And notice one thing, we stayed above the cloud and above this green line, and we've yet to break this green line at all. That's a short-term or medium-term support. That's a 26-month support right there. Okay, that's very, very critical, because once we close below there, then that basically indicates that this market is going to go for a correction, which is going to be very, very similar to what happened in 2007, and I'll show you that in just a moment. Okay, the key thing here is that we went below the green line here during this month, and we talked about this too in the last video. We came straight to this level here, and if you notice, there's 3 IMTF crosses. These are multiple time frame supports right here at 59, 19, 44. And notice one thing, they held. So that was the drawdown in the month. And then notice one thing, we are now back above the green line and sitting there about to close at the end of the day, to pretty much keeps on going the way it is, above that monthly green line, which is critical. That's telling us long term that this market is still stable, still long term bullish. It's not scary at all right now. Okay, I understand that basically we've had 3 months of living nightmare where we've corrected majorly, but you have to understand this is a long bullish move up here, which is normal. So we went up very fast in a huge percentage, so when we go down, it's going to happen a lot faster, and that's exactly what happened here. Okay, it doesn't mean next month we're going to start to go up and we're going to retest the high at all. We got to wait and be basically be patient and see what happens. I'm going to show you the resistance that we need to look. This is the resistance right now, which is at 69.03. Okay, so that's the resistance we have right now. Of course, resistances can move, but that's the multiple time frame resistance that's being established right now. You can't see that black cross right there. It's right there, but these multiple time frame resistances can go down, and we kind of need to see exactly where we close at the end of the month. But this is exactly what it looks like right now, before the markets pretty much close out for the end of this year. So this is still very strong if you look at it here. Okay, so the key thing is trying to find the instruments that basically are respecting the monthly and so forth. Everything below a weekly time frame and below, believe it or not, are not showing bullish at all. So basically the trades that you have to put on or have to be put on more long-term position trading and so forth and going forward. Let me show you quarterly quickly what that looks like. So here's what quarterly looks like, and you could see that basically we went above the cloud here in January 12, 2002. January 2, 2012 is basically when the Nasdaq went bullish quarterly. We've gone bullish, and we've not even penetrated this 9-bar support here. We've penetrated below it, but we've yet to close below it at all. That means basically long term on a quarterly basis, this is still very bullish moving forward. You can see a little bleep here to the multiple time frame crosses, and that was the first cross right there. Basically, it got to right there on the quarterly. So this is still very, very strong, believe it or not. I don't care what the news are. What I care is basically actions people take with their money, and this is still showing that this is long-term bullish going forward. Okay, let's quickly look at the E-mini. E-mini quarterly, you could see here, this is still bullish too. Notice the red line right here. We're just barely above it, but we still are above it here. So this is still basically maintaining that red line here as a support. And this went up here and you could see this basically broke the cloud here back in 2010, and then this has basically been going up since then. Okay, so basically the markets long-term are bullish. That means you got to be very picky if you're doing swing trading, day trading right now, what positions you take, because all the lower time frames are showing you bearish, except for basically monthly and quarterly. So everything is pretty much long-term. You have to pick and choose your battles right now. So if you're trying to find long-term position trades, make sure you stick to monthly, and they still look bullish on the monthly basis, and those are the ones that have a high probability of bottoming out on the lower time frames and then starting to make a move going up. Okay, here's an example of a position here that we looked at, which is Nike. You can see Nike came down to the green line right there, but the multiple time frame support right there, which is very critical. So it came straight to that level there at 66.68. At that point, you could sit there and look at long-term options to trade this with very little risk. So you could see it's coming down here, so you could either bought single calls. You have to look at the volatility, of course, or you could look at vertical spreads here, and you could look at them long term here, and you could see it's almost back to that red line resistance right there, and these multiple time frame crosses, but still some movements to go. If you look at this in a lower time frame, this is 4 hour, you could see this definitely doesn't look bullish at all. This is what I'm talking about. You have to sit there and pick and choose exactly what you're choosing now, and you have to be on the correct time frame in order to find these opportunities. Okay. Now, one of the things that we've done is that we want to sit there and make sure people are moving forward and know how to sit there and navigate these markets for 2019. So we're doing something that we've never done before at all. If you come up here to the IMTF Trade website, log in, or you don't even have to log in, but to basically come into education, go to training courses here. It'll take a second to come up. And basically you have this foundation course here. This course used to be 4 weeks only, where we meet every week for 4 weeks online, where we go through a 2-hour training session every week for 4 weeks, and then you have homework and so forth. We go through and we talk about, basically we give you a plan and we go through, you have homework, and we show you exactly why you lose. This is a very effective course here that basically we did. A lot of people that pretty much have taken it are very successful today, and no one's really ever complained about the course too, and it actually resets your trading career completely. So this is a foundation course here. The price is $599.99. What we're doing is we're giving you a non-risk offer. If you sign up for this here, this session here, then what we're going to do is basically it's a no risk offer. Reason why is you could take the first session for free. If you don't like it, 24 hours after the first session, you could pretty much email us or call us, and you could pretty much cancel it and the course completely and get your money back. So that's a money back guarantee that we're giving you, where you could sit there and take this course for free. The first lesson is the most powerful one. Reason why is we teach you how to do breakout trades very successfully, how to forecast them successfully. What do you mean by forecast? No one really forecasts breakout trades at all today. This is what I'm talking about. We're going to sit there and show you how you can look at a setup on a breakout trade and determine with high probability whether it's going to be successful or not successful by doing forecasting. Not after you enter the trade as most people do, but before you even sit there and put the trade on. So we're going to teach you how to forecast breakout trades, which no one really teaches you at all, and it helps you pretty much sit there and forecast getting to a 3-to-1 reward risk ratio in order for you to consistently achieve profits. So if you could take this course, pretty much sign up for it, and your first session pretty much it will be free. If you don't like it, then pretty much call us or email us, and at that point we'll give you your money back. If not, you continue to go forward. One of the other things that we did was that we changed it from 4 weeks of a training course to 3 months now. So after the first month, then pretty much the next 2 months we're going to do follow-ups where we'll get together, look for opportunities together, we'll go for Q&A together and so forth. So it's called post-support. For the next 2 months, we'll pretty much help you guarantee moving forward and making sure you understand things and scan for opportunities and stuff like that. So this is the first time we're doing this offer where it's a no risk offer. Up to this point we really haven't done anything like that. A lot of people have asked us for trials. We pretty much declined it. Reason why is we have limited seatings, and it is training with me. This is a course that you will enjoy, and I promise you if you take that course and you go for the first session alone, that will help you in your retirement accounts, your swing trading, your day trading, scalping. It does not matter. So it's worth a try, and I encourage everyone to sit there and do it. One of the classes already got filled to the point we have to sit there and offer another one, and that's kind of what we're doing now, is that we're doing that there. It's a great New Year's resolution, and trust me, $600 is nothing compared to the thousands and millions of dollars that you would save if the markets drop in your retirement account. So if you think about what happened in 2008 and how much you lost in your retirement account, and look at $600, that's peanuts compared to that value, and it'll help you pretty much. Not this right here will basically stop the bleed in your retirement account and your trading and so forth, because you're going to sit there and learn money management. You're going to learn how to trade effectively and consistently as an institutional trader. Come and check it out. No big deal. If you guys have any questions, you could email us at info@eiicapital.com, or what you can do is you could go to the phone number here at 646-836-9620. Thank you, and have a good day, and Happy New Year to everyone.